Hey everyone, and welcome back to Talk Tickers. We're diving into Bank of America's Q4 2024 earnings call today.
Yeah, there is.
I'm already sensing this is going to be a good one.
Definitely a lot to cover.
You've been digging through all the details, so give us the overview.
Big picture, Bank of America had a really solid end to the year.
Music to investor ears, I bet.
I think so. They reported $6.7 billion in net income for the quarter,
Okay.
which translates to 82 cents earnings per share.
82 cents EPS.
You know those numbers might sound familiar, though.
Oh, why is that?
Last year's Q4 had some unusual items impacting the results.
Right.
So to make a fair comparison, it's better to look at the adjusted numbers this time.
Adjusted numbers. Okay, got it.
Yeah, and looking at those, what really jumps out is the revenue growth.
Revenue growth, okay.
It was up across every single category.
Every category, wow.
Loans are up, deposits are up. It's like,
All systems go.
yeah, all signs point to a very healthy bank.
That's fantastic to hear. Speaking of healthy, 6 quarters in a row of deposit growth, that's really impressive in this environment.
It is.
But what's their secret? Are they like offering crazy high interest rates to pull people in?
You know what? That's what you'd think, right? But no, they've been incredibly disciplined with their deposit pricing.
Really?
Yeah. In fact, get this, the average rate they paid on deposits actually went down this quarter.
So they're growing deposits and becoming more efficient with their interest expenses.
Exactly.
That's a powerful combo. What's the strategy there?
It seems to be all about focusing on organic growth across their business lines.
Organic growth, okay.
Think like new checking accounts, bringing in new clients in wealth management, expanding their commercial banking base.
All right.
And they're doing it all without getting into a price war on deposit rates, which is pretty savvy if you ask me.
It's definitely working for them. Let's dig a little deeper into those different segments now.
Sure.
You said revenue was up across the board year over year, but were there any standout performers in the mix?
Oh yeah, definitely. Investment banking fees had a huge jump, up 44% year over year to hit $1.7 billion.
Wow, 44%.
Yeah. Mergers and acquisitions were a big driver there.
Makes sense. Lots of deals happening.
Right. But they also saw strength in debt and equity capital markets fees, too.
So a broad-based increase there.
Exactly.
And I saw their sales and trading team had a record quarter, too, pulling in $4 billion in revenue.
A record-breaking quarter for both their fixed income, currencies, and commodities trading.
FICC, as the cool kids call it.
Right. FICC and their equities trading, too.
Nice. What drove that performance?
Well, on the FICC side, tighter credit spreads and increased interest rate volatility played a big role.
Okay.
And equities trading got a boost from all the activity around the U.S. election.
Election year bump.
Yeah, pretty much.
Okay, so we've got investment banking fees taking off, sales and trading hitting records. What about their bread and butter, the consumer banking segment? Any notable trends there?
That's where the deposit growth story is most apparent, for sure. Okay, they seem to have found a floor in consumer deposits, which bottomed out back in August.
August, right.
They finished the year with $952 billion in consumer deposits.
Wow.
And remember, they're achieving this while actually strategically lowering the rates they pay.
Still blows my mind.
It's pretty impressive.
It seems like their strategy of focusing on primary checking accounts is really working.
Yeah, it is.
Bringing in those core deposits, building a solid foundation for future growth.
Absolutely. And their digital engagement is playing a big part in that success, too.
Digital engagement, right?
They had over 14 billion logins to their digital platforms last year.
14 billion with a B.
With a B, yeah. And those digital sales are really picking up steam.
That's huge.
Yeah.
Now, let's not forget about wealth management, a real powerhouse for Bank of America.
Absolutely.
How did that segment perform?
Wealth management had a very strong year overall, bringing in $4.2 billion in earnings on nearly $23 billion in revenue.
Wow, strong indeed.
They added 24,000 net new client relationships in 2024, too.
It's a lot of new relationships.
It is, which really shows the strength of their advisor network.
Impressive. And what about loan growth? I saw they had a solid quarter in terms of loan balances.
They did.
Where is that growth coming from?
Commercial loan growth was a big driver, up 5% year over year. But there's an interesting twist. They actually saw a decrease in commercial real estate loans, particularly in the office sector.
Oh, interesting.
Yeah, seems like they're being very selective about their commercial real estate exposure.
Probably a smart move in the current environment.
I would agree. No one wants to see a bank loading up on risky commercial real estate debt right now.
Exactly. What about consumer loans? Are they seeing growth there as well?
Consumer loans were up modestly year over year.
Modestly. Okay.
But the interesting thing is they saw growth in every single consumer lending category in Q4.
So there's positive momentum across the board there.
Exactly. Things are looking good.
Okay, let's shift gears a bit and talk about expenses now.
Okay.
I noticed their expenses were up year over year,
Yeah.
but they still managed to generate positive operating leverage in the quarter.
They did.
Can you break that down for us?
Sure. So their expenses were up partly because of that FDIC special assessment charge they had last year,
Right.
but also because of higher incentive costs.
Higher incentive costs.
Yeah, related to that strong revenue performance we were talking about.
I see.
Plus, they're continuing to invest in the business,
Nope.
adding bankers and advisors, investing in technology and marketing, enhancing their network of financial centers, all that good stuff.
So they're spending more, but they're also generating a lot more revenue, which leads to that positive operating leverage.
Exactly.
A balancing act a lot of banks are trying to achieve right now.
It really is, yeah.
Looking ahead, what are they expecting in terms of expenses?
They're projecting expenses to be around 2 to 3% higher in 2025 compared to 2024.
Okay.
But they're still committed to driving operational efficiency and creating that operating leverage we talked about.
Good to hear. Now let's talk about credit quality, always a key concern for investors, especially in the current economic climate.
Of course.
How did Bank of America's credit metrics look this quarter?
Their net charge-offs were slightly better than last quarter,
Okay.
coming in at just under $1.5 billion.
$1.5 billion.
They've seen some stability in consumer losses over the past few quarters,
Stability.
and commercial losses are down, driven by the continued decline in losses from, you guessed it, those commercial real estate office loans.
So even with all the rate hikes and economic uncertainty, their credit quality seems to be holding up pretty well.
Yeah, I'd say so. They're expecting the net charge-off ratio to be in the range of 50 to 60 basis points of loans for 2025,
Okay.
assuming the economy doesn't take a sharp turn for the worse, of course.
Fingers crossed. All right, we've covered revenue, expenses, credit quality, but what about capital? What's their capital position looking like?
Their CET1 ratio, which is a key measure of a bank's capital strength, rose to 11.9%,
11.9. Okay.
which is well above their regulatory requirement.
Good to hear.
They returned $5.5 billion of capital to shareholders this quarter,
Okay.
which includes $2 billion in common dividends and $3.5 billion in share buybacks.
So they're investing in the business, maintaining a strong capital position, and rewarding their shareholders.
Hitting all the marks.
It seems like they're really hitting their stride. Anything else you want to highlight before we wrap up this first part?
Just that they're actually projecting to earn even more next year.
Even more.
Yeah,
We'll have to dig into that in part 2 then.
absolutely. Lots more to cover.
Can't wait. All right, we'll be right back with more from Bank of America's earnings call after a quick break. All right, we're back and ready to dig deeper into Bank of America's Q4 2024 earnings call.
There's definitely a lot more to unpack here.
You know, one thing that really jumped out at me was their commitment to expanding their physical footprint.
Their branch network.
Yeah, even with digital banking becoming so dominant.
It seems counterintuitive, right?
It does. They opened 17 new financial centers this quarter,
17.
and 9 of those were in newer markets.
Wow, so not just filling in existing areas.
Exactly. It seems strategic.
It is. It seems like they're betting that physical presence still matters,
Okay, I can see that.
especially for building those deeper customer relationships and for providing more complex financial advice.
So it's not just about transactions anymore.
Nope, it's about that personalized touch.
Makes sense. They're using digital to bring in new customers and then using branches to solidify those relationships.
That's the strategy.
It's a fascinating approach.
Yeah,
I'm curious to see how it plays out long term.
me too.
But let's switch gears for a bit and talk about something that's been on everyone's mind. Regulation.
Okay, regulation, yeah.
There's been a lot of chatter about potential changes to bank regulations under the new administration.
Right.
Did Bank of America address this at all during the call?
They did. Brian Moynihan, the CEO, actually spent some time talking about the regulatory landscape.
Okay, what did he say?
Well, he talked about some of the hurdles the banking industry has faced in recent years.
Hurdles like what?
He specifically mentioned the higher capital requirements that have been in place since the financial crisis.
Right, of course.
And his argument was that those requirements have gone up significantly,
I-
but without a corresponding increase in risk.
So he's saying banks are being forced to hold more capital than is really necessary.
Exactly, and that it might be hindering their ability to lend and grow the economy.
Interesting argument. Did he offer any solutions?
He did. He expressed hope that the new administration would take a look at this,
Okay.
maybe by adjusting the global systemically important bank surcharge.
The GSIB surcharge.
Right, stabilizing stress test results and aligning U.S. capital rules with international standards.
So basically creating a more level playing field,
Yeah, and potentially allowing banks to use their capital more efficiently.
which could lead to higher returns.
Potentially, yes.
Were there any other regulatory concerns that came up?
Yeah, they mentioned a recent consent order they received from the Office of the Comptroller of the Currency.
The OCC.
Related to some deficiencies they found in Bank of America's processes.
Okay.
But they emphasized that they were already taking steps to correct the issues.
Good.
And that the order wouldn't impact their growth plans going forward.
So acknowledging the issue, reassuring investors, and emphasizing business as usual.
Pretty much.
It's a standard response,
Yeah.
but it does raise questions about their risk management practices.
It does make you wonder.
Did they offer any specifics on what led to this consent order?
Not really. They kept the details pretty vague.
Right.
Something about improving compliance and control processes.
Oh.
And they mentioned increasing resources dedicated to this in the second half of 2024.
So they're taking it seriously, but not going to air all their dirty laundry on an earnings call.
Exactly.
Fair enough. Let's go back to their deposit growth for a minute.
Okay.
They highlighted the stability of their non-interest-bearing deposits,
Especially in consumer banking.
right? Can you elaborate on that?
Sure. So remember that trend we saw during the rate hike cycle?
People moving their money from non-interest-bearing to interest-bearing accounts.
Yeah, that seems to have slowed down quite a bit.
Okay.
Their consumer non-interest-bearing deposits actually hit a bottom back in February of last year,
February 24.
and now they're starting to grow again.
Wow, that's great news for them.
It is. Those non-interest-bearing deposits are essentially free money for banks.
Yeah, they can lend those funds out and earn interest without paying any interest themselves.
Exactly. And it seems Bank of America has a really loyal customer base,
Makes sense.
which helps them hold on to those valuable deposits.
Smart. And they also mentioned the growth they're seeing in lower balance checking accounts.
They did.
Why are those accounts so important?
Well, they tend to be less sensitive to interest rate changes.
Oh, I see.
Customers with smaller balances are less likely to jump ship for slightly higher yields elsewhere.
So it's a more stable source of funding for the bank.
Exactly.
It sounds like they built a really resilient deposit franchise,
Yeah, they have.
which gives them a competitive edge in this rate environment.
Yeah.
Let's take a look at their loan portfolio now.
Okay.
You mentioned earlier that they saw a decrease in commercial real estate loans, especially in the office sector.
Right.
How concerned are they about potential losses in that area?
Honestly, they didn't seem overly concerned during the call.
Right.
They actually pointed out that losses related to commercial real estate office loans have been declining.
Interesting.
And they emphasize the overall strength of their credit quality and their conservative underwriting standards.
So they're aware of the challenges in the office sector,
Destin.
but not hitting the panic button just yet.
Nope. They're still seeing strong loan demand in other areas.
Okay.
And they're confident in their ability to manage risk effectively.
Good to hear. Let's talk about another big topic in banking these days, the rise of fintech and digital disruptors.
The competition's heating up.
Did Bank of America address this threat at all during the call?
They didn't mention any specific competitors by name,
Right.
but they definitely highlighted their own digital capabilities
Right.
and their commitment to innovation.
So showcasing their strengths.
Exactly. They talked about their industry-leading digital platform, the strong growth in digital sales, and the high levels of customer engagement they're seeing.
So their message is, we're not standing still, we're evolving too.
Precisely. They're investing heavily in technology and talent to stay ahead of the curve.
They have to.
Right. And they're leveraging their massive scale and established brand to compete with these newcomers.
It's a classic example of a traditional institution embracing digital transformation.
They're not resisting change, they're riding the wave.
Exactly. All right, as we wrap up this part of our deep dive, let's circle back to their overall outlook for 2025.
The crystal ball.
They're projecting record net interest income, continued growth in loans and deposits, and a stable credit environment.
Sounds pretty optimistic.
But what are some of the risks or uncertainties they highlighted?
They acknowledge that interest rate expectations are still causing volatility and making predictions difficult.
Yeah, no one can predict the future of interest rates.
Right. The current projections suggest only one rate cut in 2025.
Okay.
But as we've all seen, things can change quickly.
That's for sure. So they're being cautiously optimistic.
Exactly. And they're also keeping a close eye on the broader economic picture.
Of course.
They're currently forecasting a stable economy with moderate GDP growth.
Sounds reasonable.
But they know there are always potential challenges out there.
Like what?
Geopolitical risks, unexpected inflation, supply chain disruptions, you name it.
Right. So they're prepared for the unexpected. What about you? What struck you as the most surprising or insightful takeaway from this earnings call?
For me, it was the combination of their strong deposit growth and their disciplined approach to deposit pricing.
They're really walking that tightrope.
They are. They're managing to attract and retain deposits while simultaneously lowering their interest expenses.
Very impressive.
It really is. It speaks to the strength of their franchise and the effectiveness of their strategy.
I agree. They're proving that growth doesn't have to come at the expense of profitability.
Exactly. They're finding ways to win in this challenging environment.
That's what it's all about.
Yeah.
Well, we've covered a lot of ground in this second part.
We have.
Everything from their strategy and regulatory challenges to their credit quality, deposit franchise, loan portfolio, competitive landscape, and overall outlook.
Phew, I'm exhausted.
I know, right?
But it's fascinating stuff.
It is. And there's still more to come.
Oh, yeah.
Join us for the final part. We'll wrap up this deep dive with some concluding thoughts and, of course, our This Is Not Financial Advice segment.
Can't wait.
All right, welcome back to Talk Tickers for the final part of our deep dive into Bank of America's Q4 2024 earnings call.
The home stretch.
We spent the last two parts dissecting their performance, their strategy, all the moving pieces.
And there were a lot of them.
There were. Now let's try to pull it all together and see what key takeaways our listeners can walk away with.
Sounds good.
So big picture, what's your overall assessment of Bank of America as we head into 2025?
I think it's safe to say they're in a very strong position right now.
Agreed.
They've got a lot of momentum, and they seem to be executing on their strategic priorities really well.
They really do. That focus on organic growth, especially in their deposit base, is clearly paying off.
Absolutely. And they're also managing expenses effectively, maintaining strong credit quality.
They really weathered the rate hike cycle better than many, I think.
Definitely.
Consistent growth in both loans and deposits, net interest income on the rise, fee businesses performing strongly.
It's like they're firing on all cylinders.
They are. They've built this really resilient business model.
Resilient. Yeah, that's the word.
One that seems capable of handling whatever the economy throws at them next.
Exactly. They're well capitalized, have a diversified revenue stream, and they're committed to innovation and digital transformation.
All critical in today's banking world. Okay, before we wrap things up, it's time for our favorite segment. This is not financial advice.
The disclaimer, always important.
Always. So with that said, based on everything we've discussed today, what's one crazy but plausible trade idea you're thinking about?
Okay, let me preface this by saying this is purely hypothetical.
Of course, this is all for fun.
Right, but what if Bank of America decides to get really aggressive with their share buyback program?
Oh, interesting.
They're already returning a good chunk of capital to shareholders.
They are.
But what if they really ramped it up, taking advantage of their strong capital position and maybe, just maybe, a slightly undervalued stock price?
It would certainly send a strong signal to the market.
Right. It would show they have tons of confidence in their own future.
And it would significantly boost earnings per share.
Exactly. Now, again, this is all just me thinking out loud, but
it's a thought-provoking idea.
it is. If they were to announce a truly massive buyback program, it could be a huge catalyst for their stock price.
All right, a bold prediction. And of course, as always, we remind our listeners to do their own research, consult with a financial advisor before making any investment decisions.
This is not financial advice.
Just some food for thought.
Exactly. We just want to spark interesting conversations and encourage everyone to think critically about the markets.
All right, folks, another deep dive conquered. We hope you enjoyed this breakdown of Bank of America's Q4 earnings.
It was a good one.
It was. Thanks for joining us on Talk Tickers, and don't forget to subscribe and leave us a review.
We appreciate your support.
We do. We'll be back soon with another exciting earnings call to break down.
Until then, happy investing, everyone.
See you next time.